I am not a professional financial advisor. Any money to the stock market. Folks, today we are diving into 3 of the best Robinhood penny stocks to invest in that have the potential to make you rich if you catch them early and hold through their growth cycles. These are names in high-growth industries, names that are executing on partnerships and product development, and names that analysts believe have meaningful upside. If you're serious about making money in the stock market, make sure to watch till the end and remember to subscribe and turn on notifications so you never miss an update on the hottest stocks in the market. First on the list is Tuya, Incorporated NYSE, TY, a global AIoT company that has become one of the most attractive penny stock investments on Robinhood. Tuya is not a small, speculative company with no revenues. In fact, it is a leader in the artificial intelligence of things space, empowering brands, manufacturers, and developers to create and sell smart devices and connected solutions. It provides a cloud-based platform that integrates SaaS and PaaS offerings, and its developer base has already reached over 1.51 million worldwide. On the financial side, Tuya reported $80.1 million in revenue for Q2 2025, representing 9.3% growth year-over-year. Its blended gross margin stood at an impressive 48% for both Q2 and the first half of the year. More importantly, Tuya's profitability is accelerating at a remarkable pace, with a 25% non-GAAP net margin in Q2 and non-GAAP operating profit growth of 127% year-over-year. Operating cash flow was over $18 million in the quarter, while the company maintained a net cash balance of more than $1 billion, giving it a very strong financial position relative to its market capitalization. Tuya even paid out a $37 million dividend in Q2, demonstrating confidence in its cash-generating ability. Regionally, the company has delivered double-digit growth in Europe, strong momentum in North America, and positive traction in China, proving that its business model is globally scalable. Segment-wise, PaaS revenue grew by 7%, Smart Solutions by 16.7%, and SaaS and others by 15.6%, showing a well-diversified growth profile. With the stock currently trading at $2.52, analysts' $3.60 target suggests a nearly 40% upside potential. The growth story here is clear. As smart devices and IoT continue to penetrate households, businesses, and industries, Tuya is well-positioned as a platform leader. With strong financials, massive developer adoption, and Wall Street backing, Tuya looks like a penny stock that could move much higher over the next year. Next on the list is Richtek Robotics Incorporated, NASDAQ, RR, a company that is taking artificial intelligence and robotics into real-world applications across the hospitality, healthcare, and commercial sectors. Richtek is not just building robots for show. Its portfolio includes delivery robots like Matridi and Titan, sanitation robots like Dusty, and beverage automation systems that solve real problems in industries facing labor shortages and cost pressures. While the company reported flat revenues of $1.17 million in Q2 2025 compared to the prior year, its losses did widen, with a net loss of $4.54 million versus $1.12 million previously. This translates into a 4-cent loss per share compared to a $0.017 loss in the year-ago quarter. Still, the upside potential is notable. With the stock currently trading around $2.86, Wall Street analysts have set an average target of $3.25, with a high forecast of $3.50 and a low of $3. That implies upside potential in the 7 to 20% range. But if the company executes its sales agreements and new projects, the growth could be stronger. What's important is that Richtek is carving a place for itself in AI-driven robotics at a time when demand for automation is only set to grow. The commercial opportunity is massive. Hospitals want robots for transport and sanitation. Hotels want delivery robots, and restaurants want automated food and beverage systems. Richtek's product portfolio directly addresses these needs. While the financials are still in the early stages and show ongoing losses, the partnerships and contracts show that demand is very real. As execution improves, margins can expand, and investors may see Richtek's valuation catch up with its growth prospects. Last on the list is Seattle Mobile Incorporated, NASDAQ, SYTA, a penny stock that has been making headlines after entering into an amended and restated merger agreement with Core Gaming. Under this agreement, Core Gaming will merge with Seattle Core Acquisition US and become a wholly owned subsidiary of Seattle Mobile. This merger is particularly exciting because it expands Seattle's footprint into the AI gaming industry, one of the fastest-growing markets globally. Financially, Seattle reported revenues of $2.0 million for the latest quarter, up slightly from $1.9 million the year before. Net loss improved significantly to $3.8 million compared to a much larger $12.9 million loss in the same period last year, and adjusted EBITDA improved from negative $3.8 million to negative $2.9 million. The improvement in losses shows the company is making progress in managing expenses while revenue opportunities expand. However, it is important to note that current forecasts suggest the stock could drop slightly, with a projected value of $2.46 compared to the current $2.48. Technical indicators are showing bearish sentiment, and the Fear and Greed Index sits at 39, indicating fear. Still, the potential from a core gaming acquisition could be a game-changer. If Seattle successfully integrates core gaming and captures a meaningful share of the AI gaming market, the long-term story becomes much more compelling than the short-term price forecast suggests. At the current price point of $2.48, the stock offers exposure to both communication technology and the high-growth AI gaming space, making a speculative but potentially rewarding play for investors willing to hold through volatility. Well, that concludes our list of the 3 best Robinhood penny stocks to invest in right now. We looked at Tuya Incorporated, a global leader in AIoT with strong financials and nearly 40% upside potential. Richtek Robotics, an AI robotics company with pilot programs and multi-million-dollar contracts that could set the stage for future growth. And Seattle Mobile, a communications company expanding into the booming AI gaming sector through a strategic merger. These names represent a mix of strong fundamentals, Wall Street backing, and exposure to high-growth industries. Remember, penny stocks can be volatile and risky, but with the right research and long-term perspective, they can also deliver life-changing returns. So if you're looking for opportunities that could turn a small investment into something much larger, these 3 stocks are worth keeping a close eye on.